Well, we're at the heart of India Incorporated, the BSE, boasting over 4,900 listed companies and a market cap of 1.39 trillion US dollars. Earlier today, we spoke to the Deputy CEO, Alishia, and this is what he had to say.
The financial inclusion is one of the major initiatives of the government of India. And the fact is, the normal banking system, as well as the stock markets, the mutual funds, the insurance, and all the traditional instruments have very little penetration in the Indian market. That's where the government has been trying very, very hard to allow newer frameworks to come into the market, to include the most remote villages. There are around 1.3 million habitations, as they call it, and around 600,000 villages. And the number of bank branches are very comparatively smaller, although they are in excess of 30,000 or more. Similarly, the stockbroking, the reach of stockbrokers, reach of the depositories, reach of insurance companies are sort of varied but pretty large. At the same time, the Indian population that needs to be covered, especially the new demographics, which is kind of forcing the government to take these steps, that we need sort of a completely different framework, and the financial literacy and financial inclusion are two most important parts of the government sort of initiatives.
Of course, globally, it's a very sensitive time at this stage of the game, and investors are very risk averse right now. What role do you see the Investor Protection Fund that the BSE set up playing in terms of encouraging investors and encouraging an investor base?
The Investor Protection Fund is a very interesting concept, and it was set up long back, around 15-20 years back. And each time the exchange has a trade, a portion of the earning which goes to the exchange is actually earmarked for the Investor Protection Fund. What it does is it acts as an insurance framework. In case a broker or a stock exchange member defaults and his clients suffer, the exchange actually provides the guarantee up to 1.5 million rupees, which is around 50 to 55,000 US dollars, which is a pretty large sum. So all the small investors are basically guaranteed that their money will not be lost even if a stock exchange member fails. And that's what has enhanced the confidence of the investors in the Indian stock markets.
That when it's on the investor side, what about in the corporate arena, corporate India? How prone are they to listing? We know that we're looking forward to a 10% stake of Coal of Africa being listed on the BSE pretty soon.
BSE itself boasts of more than 4,900 stocks listed on itself. The Coal India, which is a pretty large company from a variety of angles, especially from the employment, from the precious natural reserves. Also, it is from most of its reserves are on the eastern part of India, which is financially not that well developed. So to sort of include the employees, because most Indian companies, including Coal India being what we call PSU, public sector unit, they also end up giving stocks to the employees. And because of that, we hope that almost 400,000 new sort of people who have never invested in stock market will also become the investors in the stock market through the Coal India framework, because those employees of Coal India would be owning those stocks, and once they start owning stocks, they would be able to also trade in other stocks. So that's how the financial inclusion is getting getting a pace.
All of that within the Indian border. Let's take it cross-border. I mean, we know when it comes to South Africa and India's relationship, the biggest deal that was in the spotlight was the Bharti and MTN deal, and that $24 billion tie-up was scuppered. What do you see in terms of potential for cross-border deals moving down the line?
The cross-border, in Indian organizations, when they want to grow, and they have now sort of slowly getting that confident that they can also perform on the world stage. So that same Bharti went ahead and acquired Zain, which is basically Pan-African mobile company. and they are doing, as per the reports we are receiving, they are doing well.
So the Bharti MTN deal and that fallout not necessarily denting sentiment in your books?
Each company has its own strategy and its own way of growth. They have many of the Indian companies are setting up their base in South Africa even now, and we do not believe that a particular deal would affect our relationships between two countries in any significant manner.
Are there any regulatory concerns in terms of these companies being able to fulfill their aspirations across border-wise moving forward? What are some of the biggest regulatory challenges as you see it?
Indian corporates have offices in several countries and they are used to the regulations, local regulations. And we believe, and especially the IT companies have sort of performed in most countries in the world despite sort of different regulations and even on sending people in those countries. So somewhere the Indian companies have slowly got a good understanding of how each country works and each country's social, regulatory and other systems work, and that's where we think more Indian companies would be willing to invest abroad now onwards.
You mentioned earlier that India has one of the tightest regulatory frameworks in the world. I mean, we know for a fact that dual listings aren't legally permissible in India because of currency controls specifically. Do you see that possibly being reviewed down the line?
If South African companies want to raise funds from India, now Indian framework allow issuance of Indian depository receipts. Recently, Standard Chartered Bank, one of the largest global banks, issued their first Indian depository receipt in India, and they have been able to raise good funds at good prices, and we believe it's the first of its type. But especially many companies from resource-rich countries like South Africa, Brazil would be able to sort of raise funds at very good rates because the Indian investors need to sort of have diversified asset class, and by allowing the foreign companies to raise funds in India, Indian government has allowed them to invest in a different kind of asset class.
So we've talked investor base, we've talked companies as well. In terms of the exchanges themselves, do you see any future collaboration between the BSE and the JSE specifically in South Africa?
The BSE and JSE both are part of World Federation of Exchanges, and we have a lot of mutual respect. We have learnt a lot from Johannesburg Stock Exchange, and we continue to collaborate on the WFE platform and even otherwise with JSE on an ongoing basis.